Brothers and sisters, gang, today's lesson is about 2 ways to buy real estate without a bank in 2019. Now, what I'm going to show you can be used no matter what your wants are in America regarding real estate. It doesn't matter if you're wanting to buy your first time home. It doesn't matter if you're trying to do fix and flips and you're tired of paying all the wholesalers. If you want to be a buy and hold guy like me, if you want to create notes, if you want to create sandwiches, if you want to create lease options, if you want to create whatever your strategy may be, what I'm going to show you today is 2 ways to accomplish that goal without central bankers being involved, without uh, getting into personal debt. Now, this is not financial advice. I'm not trying to tell you what to do. This is just things that I've done. I'm just sharing it with you for educational purposes. So, now that I said that, let's dive into it. The 2 ways that I'm going to talk about right now are not the traditional path. It's not the normal way of doing stuff. It's using your creativity, it's using your imagination, and doing things that not everyone else does. And that's why it creates an opportunity. And the opportunities are in a sense of where I don't have to get a loan from a banker. I don't have a certain kind of debt to income ratio. I don't have to have a certain type of credit. I don't have to do all the dance that the traditional bankers ask me to, nor do I have to put my neck out there and hang myself with personal signing and personal note, promissory note. Okay, so it's very, very powerful. Now, both strategies focus on one thing and one thing only, and that is to find what I call motivated sellers. So both these strategies that I'm going to talk about, how to buy real estate in 2019 without banks, no matter if you want to be a fix and flipper, you want to buy for your personal home, it doesn't matter, um, will require one major ingredients that are very similar, and that is motivated sellers. The whole business of what I do, which is called the pawn shop of real estate, is focused on motivated sellers. Now, once I find a motivated seller, now I'm going to talk about 2 strategies that I can implement to buy real estate without a bank loan in 2019. Before I do, I want to make sure you understand that the foundation of this business is what we call motivated sellers. And let me define what a motivated seller is. A motivated seller is someone that must sell their property because they have a sickness of one of these 2 things. A, they have a financial sickness, or B, they have a mental sickness, emotional sickness. Emotional sickness might be death in the family. Like one of my students is dealing with the seller, the husband's died, the wife is motivated. Okay, so financial sickness can be, hey, I took on too much debt. Hey, my job just laid me off. Hey, I got sick and now I can't pay my bills. So those are the 2 difference. And I'm giving you $1 million idea right now that if you don't understand who your audience is, you're going to be spinning your wheels and never going anywhere. So the whole business that I'm in is the pawn shop of real estate, and what I focus on is what's called motivated sellers. Now, I didn't put these individuals in this situation. Our banking systems, our educational systems, and etc. has put these people in this situation. And I'm here just to provide them a solution, which is a win-win situation. Okay, I win, they win. It's not their best option. It's what I call is their best worst option. Now, the 2 strategies that I'm going to talk about all depend on this one idea, which is motivated sellers. No motivated sellers, these ideas are not going to work with them because they have other options they can choose to use. But with motivated sellers, these 2 strategies work really, really good. The first strategy I'm going to talk about is where it's what I call the equity maximizer. Is where I get to control the asset. Again, I get to control the property. Okay, doesn't matter what my goals are. Let's say if my goals is, hey, I'm tired of living in an apartment and I want to buy a, I don't want to buy a house. I just want to control a house, so I can use this strategy. If I want to be a landlord, and I can use this strategy. Okay, I can't use this strategy if I want to be a fix and flipper, but I can use this strategy as a wholesaler, as a landlord, if I'm going to personally live there, because it has so many advantages. So an equity maximizer is a situation where I control the home and get the benefits of it. So I control the home, I get the benefits of it. Now, one of the benefits of having rental property, right, if you're a landlord, is passive income. So I right off the bat control the property, I get the passive income. But here's the best part. Since I control the property, I don't own it. So the seller owns it. So in the seller's case, there's a lot of benefits for them too, because the seller gets to build their equity. Because I don't own it, they own it, right? It's called the equity maximizer. I don't own it, they own it. That's why the benefits for the seller is, as I'm doing this equity maximizer, the seller's building equity. The seller's able to get the appreciation. The seller's able to get the tax deductions, right? From interest deductions and so on. But on the flip side, on the con side, on the negative side, since ownership comes with responsibilities, the seller is also responsible for the property repairs, the property taxes, the insurance, and etc. So in one way, the seller gets all the benefits minus one, because I'm going to get that benefit, which is the cash flow, right? But on the other hand, the seller gets all the negatives of ownership of a house. Anyone has to cut the grass, etc. Like they could get fined, etc. Now the renters will cut the grass, but if the renters don't do, the owner will get the hit when the city gives them a citation. Okay. Now an equity maximizer is a great idea that I like, especially in the 2019, because I'm seeing so many people with ultra low interest rate that allows the cash flow to be significant, like more than before. Before, people used to say this is a cash cow, like 300, 400, right? Today, I guess it's triple cash cow, quadruple cash cows, okay? Because interest rate at as low as it never been in the history of America, if I can simply put it. And rents are up due to the printing of money, easy debt, which just creates more money, and inflation is up. So rents are up, and in the equity maximizer, I allow the seller to get all the benefits minus one, which is cash flow, because I get that in the equity maximizer, not the seller. I control the property, I get the cash flow. But on the flip side, the seller gets all the negative parts of ownership, and anyone that owns a house ever knows that AC may go down, hell may happen, and there's deductibles, etc. So the owner gets to get all that responsibility, because they get 90% of all the benefits minus one, or the 10%, okay, which is I get. So in an equity maximizer, I'm able to get into the real estate business, be a landlord, or get a property that I would normally, have to, let's say if I had to go rent a property, let's say if I was going to rent the same exact house from the seller, depends what state you're in. For example, if you're in Florida, they want first month, last month, and a security deposit, right? They want 3 payments. So if the house is, let's say, $1,000 a month, which hardly any are, but let's just say if it was, they want first month, last month, and a security deposit. So they want $3,000. Well, in a situation where I do an equity maximizer, I'm not going to give the owner or the seller all those things, okay? Because I'm coming in as an investor, not as a renter, okay? Because I'm going to control the property. So I'm just going to make their first month payments. That's it, okay? So just the first month. So I'm already ahead 3 payments. In some other states like Colorado, Texas, etc., Las Vegas, they want your first month on a rental house. They want your first month and a security deposit. So they want 2 months. As you can see, when I take control of a house equity maximizer, I'm not giving the seller all of that. I'm just going to make their mortgage payments for them. In return, I'm going to get the cash flow. In return for them, they get all the benefits of equity building, tax deductions that I've already explained earlier. So that's one way to get into real estate in 2019 without a bank, is what I call an equity maximizer. If you want more information about that, then definitely join my profit sharing coaching at mrnofluff.com. We meet every Saturday, and I help you and answer all your questions in a group setting, and you can learn from my other students that are working on getting their deals and doing deals. Okay, now let's move on to point number 2. Point number 2 is, this is the second strategy to buy real estate in 2019 without a bank, without the whole purchase price of the property, without credit, without debt to income ratio, without jumping to the hoops like the bankers want you to do. Okay. The second strategy is what's called subject to investing. Okay. Subject to investing is simply put, I step into the seller's shoes. The seller already has a mortgage. Let's say with A bank or B bank, it doesn't matter. The seller already has a mortgage. I just step into the seller's shoes and I just start making their payments. Simply put, and then the seller transfers the ownership of the property to me, which is called the deed. They give me the deed, and I make the payments. Simply put, I know it's hard to understand that because whenever we go to borrow money from the home, 2 things happen. They create. Actually, I've done a lot of videos about that, so I'm not going to get into that. If you want to know how that works, just go back to my YouTube channel. So let's just go on the topic because I freestyle. I'm not scripted. 2 ways to buy houses in 2019 without banks. One is what I call the equity maximizer, where you just control the property. You don't take the liabilities. The other way is where you become the owner of the property. The seller deeds you the property, or the title of the property, and you just step into their shoes and make the monthly payments. Now, with the ownership comes all the pros and all the cons. The ownership is you get the deed, right? You're getting the equity build up. Okay, you're getting the appreciation if you're in an appreciating area, and that's only houses I buy in appreciating area. Okay, I don't buy war zones. You're getting the all the benefits of ownership, but on this other side, on the negative side, on the other token, you're getting all the negative aspects of ownership too, because you can't have something without all the positives and no negatives. That's only in America illusion, right? If you want to easy money, well, there's debt slavery, right? Simple as that. But people don't understand that. So with every positive, there's a negative, right? If you want to be your dreams, you're gonna have to sacrifice something. You can't just be your dreams without sacrificing something, and that's why so many people fail, right? You have to change. People don't want to change, right? So what I'm saying is the second way of buying a house is where the seller deeds you the property, you become the owner, you get all the positives and you get all the negatives. But for me, it's much better this situation than for me to go to a bank and say, hey, can I borrow money to buy a house, right? And do that over and over, because I don't like bankers, and I don't think that, just like the Constitution says, we shouldn't allow the bankers to be printing our money. Okay, and I'm just going to leave it at that. Okay, so that said, this eliminates that situation where I have to go to bankers, and I work with homeowners direct, and I create win-win situations where I save them, I save myself, and both of these situations are great situations. One has more responsibilities, which is buying the house subject to, because you're making promises to people and you got to keep those promises, and the other one, you're still making promises to people, but the promises are at the lower level. You're just saying, I'm just going to lease it for you, right? Where the other one, you say, I'm going to own it. I'm going to take care of the rehab. I'm going to do all this stuff. But the one with more responsibility has more rewards, because after 5 months, 5 years, 6 years, 10 years, the home will hopefully appreciate. If you're bought in the right area, your debt will be paid off, not by you, by renters. So you're getting a positive cash flow in that 6-7 years. Let's say $600, $700 a month. Let's say $1,000, because interest rates are so low. Okay, so it's a really, really win for me. It's a really, really win for the seller, because they have this problem, because they're motivated sellers. They might be financially motivated. They might be emotionally motivated, and I'm just solving their problem, because if I don't solve it, it's going to go at the auction, and some banker's going to profit from it. Okay. And that's the 2 ways to buy properties in 2019 without banks. Many people that will hear this will say, well, this will not work. And I understand. Trust me, in 2006, I felt the same exact way. And I'm not here to persuade you. If you think it doesn't work, great for you. But if some of you ladies and gentlemen or brothers and sisters think it works for you, then I recommend you research it and you study it, because Anytime you work with a motivated seller, it doesn't matter if you're buying cars, you're buying houses, you're buying whatever, you always can get a good deal. And that's why there's a pawn shop. That's why there's a payday check at every corner street of America. And the reason is there's a business of this because the amount of debt production that we're producing in America, all across America, thousands and thousands of people lose their homes in every county every month on the first month of the week, right? Every county, if you add it up, there'll be thousands and millions of people all over America losing their homes. So that's just one sector. But there's also people losing their homes of divorce. That's another sector. So that said, there's a lot of pool out here for motivated sellers, even if there's not a crash coming, because I've been letting you guys know there's a crash coming since 2016, 2017. I'm ahead of the queue. I'm ahead of the ball, and I've always been like that, and hopefully I'll still be like that chart, okay? But I do make mistakes, and even if I make a mistake right now and the economy doesn't crash, which I hope it doesn't, but if it does, it's a great time for me to be in real estate. If it doesn't, then that's great, because there's always motivated sellers. Divorces and too much debt throughout the county. There's foreclosures happening every county, thousands of people, and then there's divorces, right? And if you just add these two together, not any other than misfortunes like job relocation, death in the family, any of that stuff, then you can see that there's more and more motivated sellers, especially that most Americans are living paycheck to paycheck. They can't even come up with $400 or $500 according to the Fed report. That's the Federal Reserve. So 2019, in my opinion, is the best time for me to be in real estate, because there are already motivated sellers. There's going to be more motivated sellers, and when they flash it on stream media that the bust is here, then there's going to be a tsunami of motivated sellers. And I'm sorry for all the people that are going to lose their home. They should start thinking for themselves and not believing the propaganda of, getting bigger homes than you can afford and getting into so much debt and, etc. Okay. But for me, it's going to be a great opportunity. For a lot of people that stuck up their cash, it's going to be a great opportunity. But for the masses, it's going to be a massacre. And I'm very sad about that. Okay. I don't know what else to say. Guys, if you have any questions, let me know. I'll be happy to answer it. Click the like button. Let me know what state you're in. Harry, Real Estate Story. What's going on, man? Putha. What's going on, Master? Champ. Let me know if you guys have any questions about real estate. Okay, someone's asking about my profit sharing coaching. Thanks for asking about that. The way this works is we meet every Saturday. You're live with me and my other students that are all over America, and we actually work on deals, because the whole profit sharing is split 9 deals. Now, if you want to just go learn somewhere, there's so much information out there, and I welcome you to go. Okay, because I don't want people to just come learn. That doesn't get them anything. I want people that want to do deals, like they want to cash some checks, because there's a big difference between learning and doing. Right? There's a big industry of learners that make millions of dollars just teaching people. Okay, I don't want to participate in that. What I want to do is do deals, right? So I'm looking for people that want to get out of their mind and just want to go do deals, because we have a cancer of thinking. Like we're just think, what if this, what is this, worry at this. We don't take a lot of action. And learning feeds into that thinking, which is very nice, because you become like a deer. And you can just learn more and learn more and learn more, and you never have to take action, okay? Because you can always nick and pick on problems, and this can be better, and right? Where action eliminates the thinking and forces you to be, and it's scary. Simply, I can put it. And many people don't want to be scared. They don't want to be in their comfort zone, out of their comfort zone. They don't want to change, and so they're rather just be analytical and knitting and pick about all the little things that don't matter in life. But sometimes those little, I'm not saying details are not important, But knowing what details are important is the key, because there's so many details. There's so many things you can do. But doing the right thing is what's going to help you beat your dreams. And in real estate, in the business that I'm in, one of the most important thing is knowing your audience and lead generation. If you can't do these two things, then your odds of success are, I don't care if you have no money. I don't care if you have $10,000 in marketing or if you have 100,000. If you don't understand these two things, you're not good at this. Then you're going to waste a lot of your life, energy, and money. All right, guys. Thanks for watching. Click the like button. Much love.